Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well folks, another day, another record. Once again, we saw all-time new highs across the board. The indices just keep going on and on and on. We continue to see this hype. And on Sunday night, who did we see? No one but the fairy godmother.
I'm your fairy godmother. I'm here to make it all better.
With just a wave of my magic wand, your troubles will soon be gone. With a flick of the wrist and just a flash, you'll land a prince with a ton of cash.
Well, Janet Yellen just told you that everything's going to be fine by 2022. We're going to be at full employment. Everything's going to be fixed. We'll all have vaccines. Everything's going to be wonderful. And the orange man is gone. So the world goes on. And this is exactly the message that they're putting out to everybody. And let's not forget, they will throw $1.9 trillion into the market. So it is going to go higher. As I've talked about on several of my live streams before, it's possible that the S&P could get to 10,000. It's currently at 3,900. This is a craziness that is likely to continue. I've talked about MMT, which is modern monetary theory. I'll dig into this on Wednesday's live stream. There's too much to say about it to go into any detail tonight. But as we come into the week, there's really not a lot of news coming out. I talked about this. Really Thursday claims and continuing claims, which is all that's coming out this week from an economic viewpoint. We do have tons of earnings coming out, and those continue to do well. And we see all kinds of activity. Even Elon Musk has gotten into the hype with Bitcoin and all of the other things that we're seeing out there. So it's absolutely crazy. But as we go through the rest of the week, it's going to get interesting because there's still no VIG in this market. And I talk about that. That's an old term we used to use on the trading floor, which is basically there's no momentum behind this market. It's starting to come around. We're seeing our database continue to get more traction. I'll go through all these details in a few minutes. The technicals still look good, just a lack of momentum on a short-term basis. And the metals moved up yesterday. It's just all about the stimulus. And so as we go forward, this is going to be what we're going to have to watch. The question is, when does it come into play when this doesn't matter anymore? Maybe not for a while. Everybody's bought in. Everybody's waiting for their next $2,000, $3,000 check. Universal income is here and it's going to continue. I talked about this last year. This is what's going to happen in our economy. Modern monetary theory, put the money in and then they're going to spend it. And I've talked about this as well. We now have Janet Yellen in the Treasury. We've got her old protege, Mr. Jay Powell in the Fed, and they're going to spend it up and continue to stimulate this market. It's going to get really interesting as we go through the next several months. But for right now, the hype is on, it's working, and we're just going to have to continue to dissect this thing the best we can. Now, yesterday, as I mentioned, the indices were all up. We had 6 days in a row long. This is a new streak coming in. And will we get 7, 8, 9? We'll have to see. From my viewpoint, I'm still seeing that on a short-term basis, we're just getting a little stretched here. The lack of momentum is concerning. That's exactly how it keeps going as it climbs this wall of worry. Let's go ahead and take a look at the technicals and see what they're telling us for Tuesday. Well, folks, as we review the WaveTech database, as I mentioned in the opening comments, we're continuing to get traction on the short-term database. We've moved up to the 45% bullish level. we saw about 1,300 new buys, only about 100 sell signals. So this is going to be driving this market and keeping us into a positive mode. Now, I'll go through the technicals here in a few minutes and talk about the momentum, but from a pure database standpoint, we've now reached that point where this thing can grind out and move into another 20 to 35 day cycle on a short-term basis. But it is basically just telling us generalities about what's going on. It doesn't mean anything about the indices or those type of things, because we're looking at a database of over 16,000 symbols. And this has everything to do. So if you watch this channel, you know that everything I do in my work has to do with the two platforms that I developed. One is WaveTech and the other one is Portfolio Expert. And this database is what drives my opinions and shows me the direction of the markets in general. Now, our intermediate database has been about 80+% bullish for the last 6 to 8 weeks. Markets continue to move on. Nothing's really changed from that viewpoint. So as we go forward, we're now seeing the database. I mentioned in last night's video that it really is important for you to understand that we need to stay above that 42%. Well, we keep moving forward. Like I said, we had another 1,300 new buys. Unless there was some big monster reversal, we're not going to see anything change there. In tonight's video, I am constrained on time, so I'm only going to cover the S&P and silver and gold tonight. I will go into more detail tomorrow night and focus everything in on Wednesday's live stream. One of the things that I'm looking at here as we look at the futures is every day becomes narrower and narrower. And as I mentioned in the opening comments, we're not seeing any real acceleration in the momentum. And as you can see here, PPM1 has flattened off, PPM2 is turned down, PPM3 is flattened off, and we're just not seeing that momentum. So there's becoming some risk. There's also risk in the pattern that's forming as the market grid continues to get very narrow, and that's typically, once it gets close, that's typically where it will set up a minor top in the patterns. We're getting very stretched. As I mentioned, we have 6 days in a row, and now we're finally getting this thing to a point where it's stretched. If we look at the market grid for today on the futures, what we're going to see is that the R1 is 31.17. The high today has been 39.13. So we could see a little more strength as we come into the open tomorrow, but I'm looking for an R1, at least an S1. We could see this narrow range continue, but the possibilities of printing down to S2 here are becoming more realistic. As we go to the SPX, you'll see also this sharp upward rise, but with daily ranges contracting and the getting very narrow here. A couple things will typically happen. We did print up to the RTX number yesterday, 39.15.57. The high was 39.15.77, so it was an exact hit on the RXT number yesterday. As we look at the grid numbers for today, they continue to contract, and we're looking at R1 of 39.21. And if you recall in last night's video, R1 weekly is 39.20. So we're getting into the point where I thought we would get up just above the 39 handle, print up to around 39.20, and then see some retracement. If you recall, we got an RXT sell on a weekly basis. I said we could trade up to R1, and then we could see some backfilling. So this is the pattern that we're going to want to be watching. Now the grid suggests that today could be an R1, 39.21, S2 be 39.02, so we're likely to stay above this 3900 level. If we broke through 3900, I think we would actually sell off pretty hard. I think it'll hold that level, but that's the number to watch tomorrow is 3900. Break below that level, you're easily going to see S3 STX, which is 38.95 to 38.49. The final two markets that I'll cover tonight is silver and gold. Silver was printing up toward the R1 number, 27.79. The high has been 27.72. It's backed off that number now, back to 27.45. The minimum that we're looking at here is 27.36, 27.12 on the downside. We also have the 10-day moving average coming in through here at 26.92. We're seeing some of the momentum start to pick up a little bit. PPM1 is at a plus 7.3, which is pretty robust, which suggests that there's only a 20% probability to get through 26.92. So we're likely to stay above that. And we're also likely to stay under the 28 handle, with the R3 being at 28.26 for today. That would be an absolute extreme. On a weekly basis, we are actually printing into that key resistance, R1 27.75. Momentum's just as strong, but it just tells us that we're going to stay above the 10-week moving average, 25.89. There really isn't a lot of VIG in there. It's possible that we could see an R2 print, which would be 28.61. Right now, R1's looking pretty solid at the moment. Depending on how the pattern trades today, we'll be able to see whether we're going to get through that level. With it already backing off the highs tonight and down 0.33, I really don't see the momentum to push it through. So look for a test down to that 10-day possibility of going to the 10-week moving average. The final market that I'll cover tonight is gold. R1 is 1842. We've seen a high overnight of 1844. We're trading at 1840. Expectation for today is an R1 S2, which would be 1842, the possibility of 1816. Still think there's a lot of work to be done in here. Momentum's trying to turn around, but it's very neutral. Even though the PPMs are starting to slice through, the best that we could expect, and I mentioned this in yesterday's video, is a move up toward the 40-period moving average, which would be the 1865. If we look at the grid for today, you can see R3 1861, RXT is 1870. I don't see us getting up there, but the PPMs are starting to turn on a daily basis. A quick review of the weekly charts. We're seeing that there's substantial resistance at 1856. So we could see a move toward 1856 at 1865 in round numbers is going to be the upside here. As we look at the market grid, we'll see 1848 is the R2 on a weekly basis. So we've got a cluster of numbers between 1844, 1848, then the next number is 1867, which is also just above that 10-week moving average. So the clusters are resistance between 1844 to 1848. Penetration at that level was set up in 1867 to 1870 levels. The momentum on this weekly is all negative right now, so I don't really see any potential for this market to move much out of this range that I just mentioned. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night.